So with 90% of new cars being bought using car finance, the car finance mis-selling scandal had the potential to cost the industry billions. It's going to probably cost them billions anyway, but we're looking potentially, or we were looking at a cost of around about £40 billion. So there were plenty of people within government and within the finance industry who were concerned about what could happen. So if we go back in the last week, there was a key decision that was made in the Supreme Court, a ruling on a number of cases that had a potential to significantly impact the redress that the finance companies would have to pay out. So the Financial Conduct Authority, which is the regulator of the finance industry in the UK, was waiting on that Supreme Court ruling before it then consulted potentially on a redress scheme for the car mis-selling scandal. So the first thing to point out is that there are two different types of mis-selling that have occurred and that are being looked at. So the distinction is quite important. I think with the headlines, it sometimes gets a little bit lost. So the first one, which is the main one that anybody listening to this show will be probably focused on, is the mis-selling in relation to discretionary commission arrangements. So they're called DCAs for short. So this is where car dealers or brokers could increase the interest rate on the loan that was being offered for you to buy the car via a PCP arrangement in order to boost their own commission without telling you. So this applied to about 40% of car finance deals taken out before the practice was banned in 2021. And as I said, it includes PCP contracts, but it also does include hire purchase as well. So just as a reminder, for PCP is the deal where most people will pay a deposit and monthly installments, but at the end of the term, they have to make a final balloon payment to actually own the car. That's the typical way that a lot of people will finance a new car. So just to give you an example of a PCP deal where this was used, that was brought to the Ombudsman previously, there was a lender who was willing to offer an interest rate of 2.49% on the PCP deal, the finance that was required, but the dealer set the rate at 5.5%, which was the highest that they were allowed to under their discretion, to simply maximise the commission that the salesman would get. And the Ombudsman ruled that this was unfair and ordered compensation. So this then opened the doors to this wider mis-selling scandal, which the FCA was then looking into. Then we got the second type of mis-selling that was being looked into, and this is one relating to commission disclosure. It was a much broader issue, and it was argued that if the lender didn't tell you about any commission being paid to the dealer, then the agreement was unlawful. So this was the subject of the Supreme Court ruling last week, and it was looking at a number of cases that were brought from the Court of Appeal in relation to commission disclosure. Now, the court ruled that simply not disclosing a commission payment isn't automatically illegal. However, in one specific case they reviewed, the relationship was deemed unfair because the commission was excessive and it was 55% of the total cost of the credit. So this is a crucial detail because it leaves the door ajar for compensation on some non-DCA deals where the commission was outrageously high. So this was completely separate to the DCA scandal. So for most listeners, that is what they're really concerned with. So that leads me on to the biggest news of all, which was in response to the court's decision, because as I've already mentioned, the FCA had to wait to see what the Supreme Court decided because it could impact what they would do going forward. The FCA has now announced that it will consult on a formal redress scheme by October 2025. Now that scheme will definitely cover the DCAs, but it will also include non-DCAs where the commission was excessive following the Supreme Court's decision. Well, that's what we think at the moment. They are considering making the scheme retrospective, potentially going all the way back to 2007, which the industry is obviously balked at, saying that that is a long way and the records they have could be quite sketchy. Now, the FCA have said that shouldn't be a reason to not put a redress scheme in place, particularly for these DCAs that go back as far as 2007. The FCA estimates the total payouts from a redress scheme could be between £9 billion and £18 billion, which would mean that most individual payouts would be less than £950. So the timeline for the scheme to launch and people to start getting paid really is going to be early 2026. So you might be listening to this thinking, well, what do I need to do now, if anything? So if you had car finance before the 28th of January 2021, then you need to work out if there was a discretionary commission arrangement in that particular car finance deal. You can do that by contacting the lender, and Martin Lewis has a really handy tool on his website which creates a template which you can use and email to the lender. You don't even have to know the details of your car finance, just who the car finance deal was with. So via a drop down, you can find the car finance company, find the details and where to send it, and then send it off speculatively, asking if you had a discretionary commission arrangement. I've personally already done this in the past and I didn't have one, and then that's the end of the matter. If you do have one, within the same template, you can raise a complaint against the company. Now, that complaint will be registered, so it puts a line in the sand, but crucially, with the redress scheme that's coming in, it could potentially be automatic, so you won't need to put in a complaint. The car finance company will have to tell you, reach out to everybody who had a discretionary commission arrangement, and then pay them back the compensation owed, which will likely be the amount of the additional money that they paid plus interest. So that could happen automatically. So the good news is you might not have to do anything at all, but you could in the meantime reach out to the lender and ask if you had an arrangement, and then put in that complaint anyway, as putting a line in the sand. Now, there have been changes to the rules when it comes to how those companies can handle those complaints, because there have been a whole load of them going to the companies because of the likes of Martin Lewis, who've made this very public. If you make a complaint, or you've already made a complaint, do bear in mind that there is a pause on the handling of complaints by these companies. So firms have until after the 4th of December 2025 to give you a final response, and the FCA will be consulting on whether that deadline gets extended. So if you've complained, you're in the queue and there's not much more for you to do for now. If you haven't complained, or you haven't found out if you've got a DCA arrangement which you could be owed redress compensation for, then reach out to them via that template. We'll put a link in the notes of the show. And if you did have a DCA in your car finance deal, or you may have had more than one, then you would have at least logged a complaint as well. But you could just sit there and do nothing for now. The one thing you definitely don't want to be doing is getting involved with a claims handling company. So there are plenty of firms that I hear on the radio and I see online trying to encourage people to get in touch with them to be able to put in a complaint to potentially get compensation for car finance mis-selling. If you do get involved with one of those companies, and let's say the FCA decide to have a redress scheme that is automatic and they just pay out anyway, then these companies will get 20 to 30% of your payout for doing absolutely nothing. If you've already reached out to one of these companies and you're engaged with them, then you do have an agreement with them. So the likelihood is you will lose 20 to 30% of any payout you receive. So there's an article on the Money to the Masses website that gives you all of the details of what you should do and shouldn't do. And as I've just mentioned, these firms are chasing people around the internet. I'm just hoping none of their adverts appear on this video, because we don't have any control, obviously, on things like YouTube as well, what adverts appear alongside some of the media that we produce.